thinking about making like a wall of fame on my website, maybe something like that. I don't know, something cool, something flashy and cool. All right, everyone, thank you. We are recording. So, as I was mentioning a little bit earlier, uh, these will be all chopped up and edited. I'm going to give it to one of my guys that edited all my videos for me. So, not the ones that I make, the ones that you see that gets posted like early in the morning. So, uh, yeah, use this 1 hour time frame for any questions that you may have, anything about the Discord, anything about trades, anything about anything. I will answer it. Besides, how much money I make, which, I this year I've made over six figures, so I'm very very blessed. So, but again, I'll get banned. So, and that's not the name of the game about this. It's all about percentages. Currently, we are up in the portfolio about 189%, and one of the seven portfolios are all up over 100%. So, I did make a promise to everyone on April 8th. I said I'm going to 5x my net worth, and I'm currently at a 4x right now. So, with all of the portfolios combined, that is where we're at. I kept my promise. Well, almost. I've got one more X, and then the promise has been completed. All right, enough of me chit chatting. Really, ask all your questions. Feel free to ask anything you want. If no one speaks, then I don't talk. Pretty much that. It's very simple, very casual. If there's anything you want me to review, anything along those lines. Other than that, I'm just going to be just scrolling, looking through some things. No one has a question?
Okay, I'll go first. I was
Finally,
waiting for
somebody.
someone else.
I don't.
Um,
I'm interested in it being some.
All right.
Sorry.
Yep. Not a problem. Just one at a time. All right, Tammy,
oh
go
no,
ahead.
it's okay.
Good. Good.
It's okay. Just kind of wondering. I guess I'm a little confused just with I don't know a whole lot about economics and but I'm knowing that things we have to shift things and I don't know where to go is basically what it is. I feel like I have pulled some money out and I'm sitting here and yet I'm watching the stock market and it keeps going up and I don't know where to put things. I noticed that you took out the money that you had in bonds and
Correct.
yet I am wondering where are you going to more energy? Are you going to consumer staples? It's like I was
I'm
looking at the
going more
charts earlier
cash.
and honestly it's but I'm confused because it's kind of your Home Depot, your Walmart, your Costco, those kind of things aren't really doing that much. However, Costco ran up like $23 aftermarket today.
Do they have earnings or
um
something?
I'm sorry.
Do they have earnings or something?
I don't know what happened. I didn't look that far into it, but they ran up about $23 after market, so they may have had earnings. Um,
Yeah, they did have earnings.
but they did.
There's no. I'm lying. That was September the 25th. That passed.
Hmm. I
Um,
didn't look to see what had happened. I just kind of noticed it, and I thought, okay, I guess it's we're talking. Um, I'm sorry, I lost my train of thought.
yeah, no worries.
It's just more for the Roth, the IRAs, things like that. What position should we be shifting to? And I've noticed that gold's still going up, and that's okay. I'm okay with that. But just in your perspective, what sectors should we be looking at? Defense, energy, utilities,
We are looking at commodities, beaten
commodities?
down commodities. That is the name of the game. Because, so let's say about, what was it? 3 weeks ago, let's rewind. I had almost no cash on hand. I was 23% healthcare. I was 12% gold, 15% Tesla, and some other ones. But those are the major hitters, right? And
Mm-hmm.
what did I do this week and last week? What did I do?
Sold gold.
Sold how much?
50, you sold 9%, and then you sold, I believe it was 50%.
50% exactly, right? Why? First, for gold, we already bought it right before that breakout. The breakout was 317. We bought it at 314. We ran it all the way up to 366, which
Mm-hmm.
at that point, we're very, very overextended. There has been no pullbacks, which is showing strength. But even when, so having large positions, you need to sell into strength no matter what. And it may not be a problem for most people, but I try to practice exactly how I trade because I you will always notice I will always sell on a rip or just before it rips again. I always do it
Okay.
because I need exit liquidity because the amount of contracts I have, I need that exit liquidity and that only the exit liquidity only comes when price action increases rapidly. I'm dumping it off on somebody else. That's what I'm doing. But you may say, well, you're
Okay.
using percentages. Okay, okay. We already made 15% on shares on gold, which is
Right.
phenomenal.
Oh, I agree.
In a span of one
Yeah.
month, 4 shares, that is phenomenal. Now you may say 15%, that doesn't sound like a lot, but 5% move on shares is fantastic. So we 3x that. Or look at Baba, which was like a 50% move, or Intel, which is actually a 50% over a little bit over a 50%, 53% move. These are all great trades, right? So notice what I'm doing. I am taking my money out of things that have already ripped and I'm adding them to things that have not ripped already. Meaning, like B, the gold mining company, right? We added some today. That see how it's consolidating. It
Mm-hmm.
there was momentum. First, there was momentum. Actually, hold on. Instead of me trying to like paint the picture verbally, just I'll do the chart. Save myself some. Okay,
No, I watched it today. I bought a
so
little bit, but
what I am looking for is okay. So you may say, okay, why did he buy like right here? It's really far on the weekly, and the weekly is around roughly around $31, right? Ooh, that's only what a $2 drop. I'm not afraid of a $2 drop at all. Actually,
mm-hmm.
I would embrace that. But
Right.
that's a weekly candle. Now, something you need to note, right? So if this weekly, so we have what 2 days left. If this closes with a higher wick on bottom to the top on a weekly, that is just like the Johnson and Johnson chart. That Johnson and Johnson chart, I knew that thing was gonna fly. That's why I
Uh-huh.
was very very heavy into it. Like I was taking $12,000 positions each. Like that's how I was going very aggressively heavy into that. Um, and it worked out very well because the weekly there was 5 weeks that the wick to the bottom wick to top wick ratio was much greater, like 3 or 5 times. So showing that there are buyers stepping in at that point, consolidation point. That's institution buying again. That's what we're seeing here, but on a smaller time frame. We bring it back down to the daily. It's just chopping it up. The action really starts when you start breaking this previous high around that $36. Then it's going to act like another Johnson Johnson move. So,
Okay.
and another one. So that's the gold. So we're moving into that one. You took my money and put it into that.
So
Some
you took it from gold and you moved it to that mining.
I took my 15% profit and put that
Mm-hmm.
right into my
Okay.
contracts, into shares, into XYZ, however I want to leverage that position. Now, commodities, things that people want to buy, right? Chipotle. Chipotle is a okay, so the cash flow is there. Their debt is kind of neutral. right? So I went down through their balance sheet. Not to bore you, all you need to know is good cash flow. Debt is could be better, but it's okay. It's not the greatest. Not like United Healthcare though. United Healthcare was phenomenal in comparison to
Mm-hmm.
that price action. But another thing I like about Chipotle is that I believe it was the CEO of Starbucks, which was a fantastic CEO for Starbucks. I forgot his name. I'm blanking. He moved to Chipotle. And another important thing, um, we investors are anticipating that he will turn Chipotle around like he did with Starbucks. And
Mm-hmm.
another, I'm forgetting the hedge fund. I just got a contact from one of my buddies about a month ago. There was this one institution putting hundreds of millions into Chipotle. Now, a couple months ago, they would say, "Well, that's kind of foolish." Now they're down on their position. Okay, but when you trading with big money doesn't mean you're going to get instant gratification. So we're taking our money that we already made on. We took sold what 30-40% of Intel at 53%. Killed
Mm-hmm.
it, and we're dumping that into Chipotle. Now notice what I'm doing. I'm taking my profits and I'm adding it into something that needs a little bit more love, right? Let's put it like Chipotle. Chipotle needs a little bit more love. It has everything
Mm-hmm.
that's going right for it. There has been rumors stating that they're going to go into the Asian market, which if that doesn't, because they're going to
That's true.
remarket it, rebrand it as non-GMO, organic. I can guarantee you, not guarantee you like to a T, like I'm going to bet my life on it, but they're gonna make it organic, something along those lines. They say they are, but they're gonna make it like grass fed, something along those lines. They're gonna sell to the Asian market. Asian cuisine. If you ever been in China, it's very clean food,
Mm-hmm.
low spice. It's very like a lot of steamed, healthy vegetables and proteins. That's all it really is. So you put Chipotle, which is just cooked vegetables and cooked beef, into a diet that they kind of already do. They already have, but they spice it up a little bit, make it a little bit livelier. Bam, seller, right? They're taking something boring and they're making it a little bit better if they go into the Asian market. Fun fact about that: if you're ever in China, they do not serve you cold water. I learned that the hard way.
Really?
They give you like warm or hot water because they think that's like it's supposed to cleanse you or something. I need some ice in my water. I ain't drinking no hot water.
Okay.
A little weird, but yeah, I learned that the hard way. Um, but yes, so we're moving out to things that need a little bit more love. Things are tearing, and notice I'm also what 18ish% cash. Previously, 3 weeks ago, I was like almost like I was like 1% cash. Now I'm
Mm-hmm.
18% cash. The goal is to get back to about 50% cash, right? That's how we sit on a lot of cash, we wait for our opportunities, we get into the position, we sell, and then we wait again. That's all it really is.
Yeah, but failed to provide even
Ant-Man, can you
necessary
just mute real quick? Thanks.
privacy or other things, and
I'm just
failed in
taking
some
notes
way
in
to
class.
harm or there's a conspiracy between them.
All right, did that
So
answer your
these
question? I know I kind of went on a little tangent, but it's better to, let's say, explain in detail than into minimum detail. Let's put it that way.
Okay, talking about your Chipotle,
Yes.
explain to me economically why I think I really think about this recession coming in and we talk about layoffs, people reserving their cash. And to me, that says that people won't be eating out very much. Um, and so how does that explain it being a good opportunity to get into something like Chipotle? Um, does that make sense?
So you've already asked. Yeah, this is the sixth time you asked me about that same topic. I remember last time it was 5 times you
I
asked me the
did.
same. Yes, yes, this five same. Back in April, the market dropped 32%. We were in a recession. I said I had like 4 videos saying we're in a recession. You're not going to hear it that we're going to be in a recession, but once we're out of the gutters, everyone's going to
I
say
do
we're in a
remember
recession.
those.
And so a pullback is about roughly a healthy, good bull market pullback is but like 6 to 8%, and potentially going a little to about 10% on like a wick day, like a wick week, I guess. 20% is a full-on correction, meaning the market's going to pivot. So once you go past 20%, now we're 12% greater than 20%, which is 32%. Now we're in
Mm-hmm.
recession zone, and yeah, that we were already in the recession. The recession's gone. The reason why I'm not so concerned about 2026 as I am with 2027 is because we're bringing in a lot of tariffs, hundreds of billions of dollars in tariffs. If we weren't, I would be very, very cautious. But because we're starting to get cash flow, just like in a company, like where we trade, cash flow is blood to the body. So, and Trump knows it. He knows this. He knows money better than anyone. And politics wise, I don't really care. He tweets terribly, but his money is where his thought process with money is correct.
It is.
Because
I
he's
agree.
running the country exactly how that should be, like a business. We sell goods and
100%.
services. And he's doing it in a way, just like when we pay sales tax when we buy our Dunkin' Donuts, another country needs to pay their sales tax. But in terms of sales tax, it's tariffs. Now, there's different types where sometimes they'll be sitting at the ports, and let's say Amazon needs to pick up items at the ports, then they'll have to pay. There's a whole bunch of different ways on how these tariffs go about. Sometimes they're contracts through the governments themselves, but at the end of the day, it's all about cash in, cash flow, and we have a significant amount of cash flow coming in, which is very, very healthy for a market. Very healthy. Just like blood is healthy, having good blood circulation to the body is healthy, keeps us active. Same thing with a business, same thing with a country. Cash flow. Good, consistent cash flow keeps the country healthy, keeps a business healthy. So, even with that putting said, even if there was a recession, right, would I be fearful? Not at all. Why? Well, because we are, when in doubt, we zoom out. Another rule is we buy quality stocks when no one else wants them. So this right here, this was what? June, this is 2021, right? This was the initial breakout before Chipotle started ripping. So what becomes previous strong resistance that then breaks becomes strong support. This is why we were buying somewhere along here. That's it, the yellow line, right? Line in the sand. So regardless, it has already dropped off its lows. What? About 30-ish percent, right? Something about that. But again, not too worried with it. Um,
Okay.
okay, let me just read some other people's comments. Okay, we're talking about TTT morning reports. Those are it just pretty much gives you an update in the morning. It tells you economically what's going on, what's the prices of gold, oil, defense, war, everything. And then it rates it. On the bottom, it tells you the percentage. I think today was 67% bullish and 33% bearish. And if you notice today, if you just traded that report alone, market hit an all-time high. The Dow hit an all-time high. So they're very accurate. And I think one time it was like the opposite. It was like 30% bullish, 70% bearish, and the market had like a 1% drop in the day. So it's just used as additional information to help you better confirm your trades. That's all it is. It's another confirmation because we believe in 5 layers of confirmation. Like you add that as another layer. Okay, going down the list. Can we review SMCI take profits? I'm in the contract, wanting to get out at the time you do with shares. Also, what is your thought process behind United Healthcare now that we stand? Okay, again, nothing had. I think I've answered this before. I think I did this. I think I answered both of these questions before, Marlon. SMCI, $60. I'm trimming my profits. I think it's going to go higher, closer to 70. I'm taking my profits at 60. We're technically, well, a little bit of profits, put it that way, because I do think it's going to go much higher. I won't, probably maybe about 30% I'll trim, because I do think that it's breaking out of a wedge, SMCI, and we timed that one very nicely with just saying $2 million calls. That's that same contract you got, $2 million. That is a serious contract for SMCI. And then repetitive buy orders at ask, roughly around 600,000. So that's something not to mess around with. That's a pretty serious entry. And look how beautiful that is. This makes me smile, SMCI. This was a beautiful day. This is exactly what needed to happen. So if I were you, Marlon, for your SMCI, I would set a trailing stop loss, because I believe we might retest this zone roughly, I don't know, this $56 level, for us to pop up to this previous, what was this, support that then became resistance of around $73, $74. You might be if you sell now, you might be selling a little too early. Which again, if you got it in $49 and it's 59 ish, you get a $10 move on a leap. You're making over 100%. That's a fantastic move right there. But yeah, I'm not too worried about SMCI. This was exactly what I needed to see. That was a beautiful candle today. What we got, this confirms. We confirmed. Well, actually, if you want to be more, this is like an early confirmation. If you want to be truly, we get another retest at about 56, and then we pop. That would be the first confirmation that SMCI will break out. Why am I buying SMCI and not all the other quantum crap? It's because SMCI. So, what was it? What was the other? You have the AMDs that produces the engines, right, for the computers, while SMCI builds the car with the engine and sells it. So you can't have one without the other. You need the infrastructure. You need they pretty much put everything together in a nice package to give to these data centers. So, for example, Datadog needs and Tesla, they need the SMCI pre-built cars with the AMD engines. OpenAI is now doing that. You have to look broader, and once a lot of these decisions when you're making, and this is how you can make a lot of money. But I am confirming on all my trades. Okay, United Healthcare, again, 370. It held above 370. A little wicky today. That's okay, but we still above 370. Nothing has changed, so it's going higher. I'm not selling my United Healthcare shares until it hits 500. The UNHG, I'll be trimming those more frequently, but I'll be selling cover calls off of United Healthcare and collecting those dividends. Just know if you do cover calls, you give up the rights for your dividends, so you make sure you time your cover call expiration with your dividends. You want to do at least roughly a week. Give yourself about a week buffer so that you can both collect the cover call and the dividend. It's like double dipping. It's fantastic. I love it. Okay, whatever you got a chance. Okay, moving on to the next thing. Post-market report. How we put it. Post-market report? What are you talking about? Oh, you mean for the free one? You have pre-market, market update, and post-market? I'm just organizing my notification. That's all it is. It's just organizing by time frames. That's it. Path. Yes, okay. if we get another rate cut in October, we're going to be very, very rich. We're going to be richer than we are now. We're going to be very, very happy. Now, again, we're going to be cautious. You're going to see everyone chanting off the roof of the top, oh, I'm making so much money, a millionaire, here, over there. If you look under your seat, there's a millionaire. Everyone's going to start ramping up this never-ending gains. Again, we are trimming profits and being crystal clear. We are 18% cash. Within a matter of a week and a half, I sold 18%, keep locking in my profits. So you have to manage your risk. Yes, we're going up higher, but the higher we go, the further down we fall. Just letting you know. So this is why we will continuously keep trimming profits and circulating our money somewhere else. Just like when tech was dumping and I circled most of my money into gold, that thing parabolic, waited for an Nvidia to come up. We didn't get into Nvidia, but we got into the AI sector again once it started really breaking out. Nvidia, which Nvidia is doing well. I saw the chart earlier this morning. It looked really nice. Yeah, the Nvidia chart looks really, really nice. Like to the point where we might take some swing calls. I'm a little cautious because this is a very, very wicky price action. Not too clean. Okay, now we got to go to path chart. He's not here. We're chilling. I don't got to do it now. Is he here? Let me just double check. Keenan. Nope, he's not here. All right, Keenan, you miss out. Just like last week, I would like to hear your thoughts and worth to play. If it surged again, it might be a little overextended. Oof. So the only way I will be touching Dell, even if I'm like, I think it's going to go higher, the only possible way that if Friday at 3:55, we have to have no wick on top. No wick. Not a little tiny one, nothing. When you're at all-time highs, there has to be no hesitation for there being buyers. And that means no wick on top. I don't care too much about the bottom, but the weekly candle has to show no wick on top. If that is the case at 3:55, we're taking lotto calls on Dell. But right now you don't really. Right now it's a little risky, but close, it might go higher. That's okay. We trade on confirmation. But wow, look at that. That's an inverse head and shoulders for you. Now I will be very, very interested. Very interested. I know this sounds very odd for most people. Why would you want to buy at previous highs if it breaks out? It's because it can go much, much higher, right? Look at this. Look at this massive inverse head and shoulders pattern right here. This whole thing right here. Let's see if I could draw it out. This right here. So the neckline is something like that. Bam. So you're going to get resistance. If it does decide to move up higher, it will hit roughly around 180. If it breaks through 180, then we're going to be very, very excited because then it can go much higher. But again, that's a little overextended on the weekly and daily, so got to be cautious. Notice how I said a potential lotto trade, not a let's put my whole portfolio in it. That's not too smart.
Did we look at Trading Desk at all? I know some of us took a call in the Discord. I'm not sure if you called it out. I forgot.
No, I was looking at it. I didn't get a chance to enter. Did not get a chance to enter. Honestly, you're okay with your calls as long as it holds above the 8 EMA. As really, my eye is going towards this range right here. this range. As long as you stay in that range, you're okay. Now below that range, you're kind of screwed. We'll put it that way, in a lack of better words. Above that range, you're going to be wishing you bought more calls. Let's put it that way. So if it closes a daily candle
the
above,
EMA is 50, right? Or is that the zone like 43, 50?
No, you are trading gap. This is gaps and supports. So notice how this gap. This is going to be strong resistance. This is why you got that little wick down. Very strong resistance breaks through. This thing is like a rubber band, and your hand is this point right here. This is your hand right here. And as soon as the price action goes above, you're letting go of that rubber band. So it's going to want to shoot up anywhere from here to one of these levels. More than likely, it will probably shoot up closer to this previous gap up, this support, and then this will probably trickle back down your 200 EMA on the daily. So somewhere roughly, I would say my target would be like 68-ish. That would be a very good take profit. But again,
and then if it goes below 50, you said
yeah, below 50, goodbye. Goodbye. Okay. Because if it does hit 50, it wicks down. So you want to make sure you're usually about 5-ish% when you're swing trading. You want to have your swing trades are going to have higher percentage stop losses. It's just so that you don't get wicked out. Sometimes you get wicked out. That's okay. You take the loss, whatever. We'll get into another trade. But a lot of times I do give myself whatever I think my stop loss should be. I add another 5% to it. Now people say, well, that's kind of stupid. But I've gotten wicked out hundreds of times out of a 1 to 2%. And I wanted to literally scream, particularly NVIDIA, just saying, when NVIDIA was in the 20s. But again, you might get a little inverse head and shoulders pattern, right? That may happen. The upside potential is much greater than the downside potential. So I wouldn't be, your risk to reward really with your call is anywhere from a 2 to 5 ratio. Risking 2 to make 5, which is a very good ratio.
Thank you.
Yeah. Okay, just clear this up because this is actually my chart that I use. Okay. All right. Any other questions? I think my control Z is broken. Oh, never mind. There we go. All right. Any other questions? Don't be shy. What time is it? Oh, we did a lot in 30 minutes. Damn, we're cooking. I was like, was it 6 o'clock already? 5:30 on the dot. We're doing good. All right, keep asking those questions. Anybody? Nobody? Anybody? Oh, Keenan's back. You want me to do Path, Keenan? I was about to do it, and then you dipped. I was like, all right, not going to do it now.
Yeah, 10-4, let's take a look at it. I heard that they've got a lot of big contracts coming up, maybe.
That is a very interesting chart. Wow, their earnings are fantastic. Look at that, all green. Hold up. 14, that's very good. 24, very good. I mean, that's still pretty good. Very good. Wow. It's not a bad trade. Not a bad trade.
It's been pretty beaten up, lately, so I thought maybe it'd be a good time to get in.
That is not a bad idea. This one, I'm going to need to take a little break later and take a little look at. I got to do a little diving deep before I really go and take a position in something like this. Again, not saying I am, just saying I do get their balance sheets because it's all publicly given, and I want to go through it now. Just eyeing it up. I mean, earnings they have not had a single bad earning. So this is telling me that these are all news catalysts and contracts. That's all it is. Their cash flow is solid. It's looking pretty good. And this $10 support is phenomenal because every time it hits there, it's like bam, bam, bam. At like freaking what, 5 to, oh my gosh, $18 move. But just really quick, you would want to target the previous year's high. So in December 2024, this about roughly $16. So we're literally right at that point. So if we get a weekly candle, now with things that are beaten up, you need weekly candles to confirm. Unlike Johnson Johnson, we were using some daily candles to confirm in SMCI. But for this one, you would definitely need a very, very large engulfing weekly green candle for it to confirm. That would be a breakout. That will be a breakout. Your target's going to be that gap up to about $18. So that's a $2 move from about 16. That's a very good move. On something that is beaten down, the contracts move much faster on companies that are beaten down that then surge in price. Just FYI. You will actually, if you get into a contract at a breakout and this continues higher, let's say I got in at $16 and it goes to 18, you're looking anywhere from 200 to 300% on a 2-month out expiration. On a 6-month out expiration, you're looking at anywhere from 70-ish percent to about 80-ish percent, which is phenomenal. But lower risk, lower reward. So not a bad idea. But if I forget to write something about this one, just give me a little heads up in the Discord because I've been all over the place these past 2 weeks, literally all over the place, physically all over the place in this country. So, okay, we got another question. Did I answer your question, Keenan? No, kind of answered it, but I need a more.
Thanks. When you look into it a little bit more, just let us know what you think.
I will do. Okay.
I appreciate it. Thanks.
Yeah, not a problem. Can you talk about position sizing? I don't know how to unmute. Okay, let's hold on. That's not what I wanted to do. What did I do? What the heck did I do? How do I? Oh, there we go. I've been. Give me 1 second. I'll unmute. There's a mute button right on the bottom. If you're on the iPhone or an Android, if you're looking at it, it's right on the. Right, like hold up. Let's see if I can. Maybe it'll allow me to do another disc. It will kick me out, but usually it's right on the bottom. You just click it and it unmutes. I can't do it because it will kick me out of this one. But how to position size? That's a very, very good question. A lot of people, let's say, over leverage a position or under leverage a position, and they could be mentally defeated, not physically defeated, but mentally defeated, because if you, let's say, have a smaller position and it skyrockets, you're like, wow, I'm up 50%, but that's only like $100. Big deal, right? Or comparison, I leveraged my full portfolio. Now I'm down 50%. Now you want to go cry. So very, very easy. We're going to make it very easy. Let's put it that way. It's not easy, but we're going to make it very easy. We're going to do. Actually, I don't want to use this chart. I want to use something that I haven't. Someone throw a ticker out that I haven't talked about. Oh, actually, you know what? Never mind. This one be popping. This contract I saw all day. Notification all day long. Millions and millions of dollars going into this one. This was crazy. Okay. Where is a good setup? This right here. So I do something called Fibonacci. Now you may have heard of the Fibonacci retracement, this wacky looking thing, right? Well, I necessarily not use the Fibonacci retracement. I use the numbers that go with it. Now the true Fibonacci retracement, all it is the first and and the previous upcoming number, you add those together to get a third number. So to make it really easy, you have 1 and 2. Your next number is 3. 2 plus 5. I gave the answer. 3 plus 2 is 5. 3 plus 5 is 8. So why say that, right? You can put this in percentages. You can put this in percentages of money. You can put this as shares. You can put 1 share, 2 shares, 100 shares, 1,000 shares, whatever how you want to do it. That's just about scaling. That's what we're focused on, is scaling. So, for example, let's say I want to get into this POET stock, and I think it's going to go up high forever and ever, right? Whatever. You only dollar cost average is something that you know is a good, strong, fundamental company. So, for example, we're going to do jot some lines down. They have no meaning, so don't take these with a grain of salt. I'm just making some random lines just so we have an example. All right, wow, random lines, right? So let's say I need to dollar cost average into a position as the trend is going up. So what I would do is my first position was going to be anywhere where it touches an uptrend. So let's make this much cleaner. You may say this is a really long, drawn out explanation. We'll kind of have to explain it this way so that you get the full idea, because it won't work if you don't. All right, real nice trend. Actually, that was a really good trend line. That was a really good one. Okay, so as long as it touches this trend line, I'm going to buy. That's going to be the parameters. So at this point right here, so let's say it skyrockets at this point. You're like, oh shoot, you know what? I'm going to wait till it comes back down. We're going to wait till it retraces. Oh, okay, we got another starting point. We're going to buy 1 share. Wow, over here, touched again, continuing the trend line and confirmed. You might want to buy it a little bit higher to get a confirmation, but I'm going to buy 2 shares. So now I have 1 share from previous, 2 shares from the current. In total, I have 3 shares. Look at that. Another entry, 3. So now I have 6 shares in total. All right, if you're following along. And then I'm going to get 5 shares. So now in total, I'll have 11 shares in total. See how as you do a fib, a DCA, a Fibonacci dollar cost average, you're not going to see this anywhere. I kind of just made this up. I just used it because I used Fibonacci for a very long time in school, and Laplace transforms and controls operating systems. So that's all I really did, and I used it as a scaling factor. So that's all it is. Now, when I first get into a position, it's very small because I don't know if it's going to fully confirm. And as it's confirming higher and higher and higher, I'm buying the higher low, higher low, higher low. And every time it's a higher low, I'm adding greater and greater amounts because every time it's confirming higher and higher and higher. So now, let's say we got into our final position size, somewhere right here. This was 8. So now what was that? 11 plus 8, that's 19 total shares. And you're going to probably get an average price somewhere in the middle right here, somewhere in the middle. So you're probably going to get an average cost after doing all this somewhere in the $4 range. So now you have a good average, solid, good dollar cost average position. You were patient, you waited, you got out on pullbacks. That's exactly what you needed to do. You confirmed we were going in heavier as the position was going up. Now, how do you get out of a position? You do the same exact thing but going down, but you flip the numbers. So let's do just for lines, right? This is not a trend line of any sorts. It's just something I just drew so that it was easier to, actually that actually makes it really difficult for me to do that line in particular. Something like this. You're going to flip these numbers right now. You're going to inverse them, right? Flip them, the opposite. Over here, let's say, wow, now I'm up 100% on my position, 90%. I'm going to sell 8 shares. Now, at this point, okay, It looks like it's going to fall down. This is a daily candle, engulfs the previous one. That's a confirmation that we're going to fall again. Now I'm going to sell 5 shares. Oh, we got a nice little pop. I'm going to sell 3 shares. 3. Another pop. 2. Another pop. 1. That's how you get out of the position. Now notice in the beginning when you're going into the position, we're being very cautious. 1, 2, 3. And then after the third, we're getting more aggressive in our buying because after 3 touches of the line, of a trend line, that confirms the trend. 3 touches of a trend confirms a trend. And then we start ramping it up. 8. Actually, it would be 5, 8, 13, 21. We start really ramping it up. And then when we want to take profits, we flip the sequence. So now we are selling heavy at the top and we are holding a very small position towards the bottom. So we are maximizing the entire way up, maximizing the entire way down. That's how you correctly position size. Now with gold, I sold 50%, and I did that because we were very I should have been trimming profits, but I said every weekly candle up just keeps going up and up and up. I said that this thing has no red candles. I said this thing's going to keep going up higher and higher. I'm just going to hold it. But I'll hold it to the first official take profit of $366, which we did, cut 50%, and now we're holding it up. Now it's another a couple dollars up higher, $6-7 higher. So we're in that ride. So there's different strategies in different ways. The reason why we did gold and cut half is because it was a legit rocket ship. No one talks about that trade, which that was the most, doesn't matter any time from the past, 2 months, you would have made money because that thing kept continuously going up higher, and higher. Very strong, very stable. Now at 372, 373, it's not looking too stable. It's showing a slightly weakness. I think I saw a couple puts on gold, very small amounts, but nothing that's going to really dump the price, to be quiet. Maybe $3 it's going to drop it, which is nothing for gold. Well, GLD. All right, I hope that helped. That's the correct way. Maybe I'll do a YouTube video on it. I don't know. I'm very busy, but that is the best way how to make generational wealth. That is probably the only way that no one tells you that they should tell you, or maybe they haven't figured it out already. Because people say, "Oh, I'm just going to throw $100." That's all good, but there has to be a strategy when you go in. Always. Trading is like a business. We're going to treat it like we have a business plan. Now, like I sold gold, I keep going back to it, is because I had a business plan for the past 3 weeks. Right, Tammy? I said that chart has never changed. I said, first take profit, that little trash can saying trimming 50%, has never changed those 3 weeks. That is the game plan. We stuck with the game plan. It's just like a business. Everything else is now icing on the cake, but we got in, perfect timing, got out, in my opinion, at a perfect timing, because not everything goes up. You start getting euphoria.
Was a great example too. That was a really good example.
What, of gold or of this?
No, the chart that you have.
Oh,
there. Are you still? Would you? Let me ask you this: would you get back into gold if gold hits the 8 EMA on the daily, like you were talking about? Would you get back in?
Yes and no. I'm going into the more things that are. So when I say yes or no, yes, I'm going into gold related ETFs and stocks, but not necessarily gold itself, if that makes sense.
Okay.
So that's where the no comes in. No, not adding to GLD, which it is strong, but again, you can look just okay. These are daily candles. Look how tiny that volume is. Little. This was the confirmed breakout. This is what I said, everyone. This is right here is where we bought GLDM. That is a 2x leverage. I think we made 15-17% on that one on shares alone, which is fantastic. and we still have 50% of it. But this right here, this daily candle on gold, that was a beautiful candle. That's saying institutional buying. All this up here is not institutional buying whatsoever. It's not. It is retail. It is institutional buyers holding at roughly any in this zone right here. In this zone, it's institutional buyers holding, not selling, because when they sell, you'll get a dip like this. This is a take profit. This is exactly what this is. This is a take profit for institutions. They have a lot of equity, a lot of capital to do something like that. This is telling me that they have not sold any, maybe 1-2%, which is nothing, just to cover expenses for the month. But they have not sold a significant amount, 10% of their gold. How do I know that? No significant pullback whatsoever. And all these candles are very small volume. When there's smaller volume, it's all retail. Retail is pushing up the price action as institutions are holding it. They're literally saying, ha, you're going to make me rich, even richer. Or gold. Have you ever noticed? All over the news, all I hear is gold. All I hear is gold.
They're
right?
talking about it.
Now, what happened when we were talking about gold in late August, middle of August? Not a freaking cricket. Not a news article. Not a nothing. Nada. Zilch. Same thing with United Healthcare. When it was at 240 beating up, nothing. Until Warren Buffett buys a large position in it, then now it's great again, right? All right. Now you keep hearing about medications, Medicare, and how United Healthcare is ramping up, yada yada yada. Now that's all you hear. I always say this: who owns the news networks? Institutions, big banks. They own the news network stations, and they manipulate them in marketing so that you become exit liquidity. I say it literally every time I talk to people, because it is the clear, blatant truth that no one wants to come to the realization that it is a real thing. Once you really see it, you become very, very rich, very rich. And there's a lot of people that have hollow words that say that you can become rich. This is the get rich, all that crap. They sell you a $1,600 course, which really just pays for their mortgage. Let's be completely honest. And because their trades are crap, and when they only post about the 1,000% win, they go on a rant and make ads all day long about it, right? The best way, slow and steady. It's not sexy. It's not it's not beautiful. It's not the dopamine effect, but it is what gets you to true wealth faster than any other asset class. Any other asset class. Forget about real estate. Forget about reselling. Trading stocks and treating stocks like a business is probably the best advice given to someone that wants to start their own company. If you can treat something that is not yours, that is your business, because when you buy it, it becomes your business, and you treat it as if you're reading the balance sheet, giving yourself a business plan, your business will thrive 100 times. I've done it. I've done it. Let's put it that way. If you don't believe me, just try it yourself. That is the best way on how to, if you want to start a business, learn how to trade stocks. Trading stocks removes your emotions. You have to remove your emotions from the stock market, because once you do that, everything else becomes a blur, becomes a numb. Because I've been in screaming meetings, and you know what the people's the biggest pet peeves, when they're screaming at my face on how things went bad or XYZ, a monotone, self-controlled conversation. They can't stand that. But people, what they cannot stand, they tend to migrate towards. And same thing with the stock market. And this, going back to marketing. And this is how come people are going to get rug pulled on gold. Just saying, if you don't take profits, it's on you. Yes, it's going to go higher. I believe it's going to go higher. But someone somewhere is going to manipulate my words, over leverage it, and lose a lot of their money. And then they're going to say, oh, you don't know what you're talking about. Being clear for everyone that's here, you're all witnesses.
Yeah.
And I say it
No,
every
did
video,
great.
but you can't go 15% on an ETF that's over $300. That's a $60 move on $60 per share. Are you kidding me? That's fantastic.
That was unbelievable. No, I was happy. I pulled out. I got out of all of it on gold. Because I'd just rather have it than to lose it.
That so the good and the bad. The good thing is you will lose less, keep more if you're very skeptical like how you are. Which is good. Mm-hmm. Which is good for the situation in which you are, because we talked before. I kind of know you, so that is very good. But for someone starting out, you need to be a little bit more aggressive. You need to be a little bit more So this is someone that's like Ant-Man. I know you're in college, you're getting your master's degree. You got to be a little bit more aggressive, and not too aggressive where you're 100% your portfolio, but instead of 2-3% on an option trades of your portfolio, so 2 or 3%. In my opinion, someone that's younger, that has more time to make up for their mistakes, needs to take advantage of that time and take a little bit more risk. 10%, 15%. Don't go more than 15%. After 15%, it becomes very, very difficult to start recuperating, and then you go down this vicious cycle. I've been there. I've done that. You really want to stay just at 10% on a position. You got to be a little bit more aggressive. Now, if you're close to retirement, you got to be the opposite. You already have the capital. You already have the equity. Now you're really looking for single-digit percentages that are consistent. 3, 2, 5%. Weekly, consistently. Because what? 1% of $1 million is what, 10 grand? I'll take 1%. I will take 1% every week. How easy is it to get to 1%? Very, very easy. Like to the point where you don't need to think about anything. You can just put in anything that's going up high, that has a trend, and get a dollar move, and you're chilling. So when people think that, oh, I'm not making a lot of money. Once you come to the point where you have a significant amount of capital, when I say 5% is a fantastic move, to somebody that's a $50,000 day. Now, a 15% is a $150,000 day. Just putting it out there. So putting these positions, as you see me do trades with shares, the higher the percentage that is above 5% is fantastic. Now with options are a little bit different, but with shares you want to make sure it's like a house, like a rental property. You want to make sure that your renters are not destroying your house. So destroying your house is below 5%. Let's say the painters paint your house, right? Now you're at 10%. Wow, they're adding value to it. Because currently 5% is the rent and paying for my bills, and I keep about another couple $100 in my pocket for the rent, like revenue-wise. Anything above is additional, like the renters painting the deck. The renters, that's not going to happen, but I'm using that as a metaphor, an acronym, or whatever. It's adding additional value, icing on the cake. That's all it is.
I have a question on the chart that you have up right now.
No, you don't.
You were showing.
No. I'm just kidding.
That was. Oh, I'm sorry.
I'm busting your chops. I'm just busting your chops.
Oh, me? Oh, I
yeah.
didn't hear what you said.
I said nope. No. I said nope.
I'm done with it. You're done with your questions. Now, I had a question about the the retail buying. When it's consolidating like that, is that all retail? I mean, obviously not all of it, but when a chart consolidates like that, is that typically mostly retail buying?
You're talking about this right here?
Yes.
No, that's 80% institutions.
I'm sorry, that's what I meant. I meant institution. I'm sorry.
Yep, 80% institutions. Yep, you know what retail's buying? Retail's buying all this.
That's most of, that's when it's being talked about. Okay, I didn't know that.
No problem, Ant Man.
You're so smart.
No, everyone is smart. It's confidence. That's what it is. And how you get confidence in your trade is that you confirm to yourself, yes. Like the last video, the last week, trading is a yes or no. And when people ask me questions and they give me a maybe, that is my biggest pet peeve. A maybe or a, I'll even take it depends because that's a very good answer on certain questions. It depends is a very, very good answer. Just FYI. But a maybe, like, I don't want to answer your question anymore. That's how, like, kind of aggravates me because when you trade, it's yes or no. When you make a decision, it's yes or no. When you buy or sell, there's no maybe. Right in the middle, maybe 50-50 raffle, right? There's none of that. You buy or sell, yes or no. That's all it is. Once you pick that 50-50 black or red, the roulette table, now you have to confirm to yourself, why did I pick no? Why did I pick yes, calls, or no for puts, right? Why did I do that? Every time you want at least 5 confirmations, either cash flow, economic news, or in this case for gold, it was institutional buying, and we were doing cycling. I cycle with institutions. That's all I do. I just know their game slightly on the same page as them, so I'm able to kind of jump ahead a little bit. Once you see it, kind of deal. But it comes with time. But yeah, it's kind of hard. It's kind of hard, and actually, it's easier if you did this one thing, and for it, let's say we looked at Tesla chart for whatever reason, right? You could tell me. I always use this example. Always. It probably sounds redundant. You can literally give me any price action on Tesla. You could say it's 140, 137, 150, 450, and I could tell you calls or puts. That is how versed I am with the chart. Now, how do you get to that point? I did this for 2 years straight, every single day, when the market opened and when the market closed. I wrote the price action of what Tesla opened at and what Tesla closed at. I did that. I studied that. I was able to find gap up, liquidations, everything I needed to know that the price action tells you the story. The price action wants to conclude the story. It will rhyme with itself. So in order to figure out the rhyme, you have to just pay attention to the pages. And that's exactly what you're doing. Every single day. You could do this for a month, 3 months. I suggest this a lot of the time. No one probably takes this advice because it's boring. It's a pain in the butt to do. But the things that are difficult are the things that give you the most reward. Always. Always. The things that are easy are usually scams. Just letting you know. If it's difficult and it feels like it's difficult, you're on the right path. So by doing that, you could do any ETF. Apple, Amazon, QQQ, IWM. Doesn't make a difference. I do not care. It works for everything. You do that for a month. Do it for 3 months. You don't have to be as dramatic as me and do it for 2 years straight. But wait, Alexa, every time the notification for the garbage. But you get the point. Right? Does that make sense?
In regards to crypto, I've showed you my portfolio a little bit. I know you recommended a few cryptos, but I have some capital locked up in like bullshit crypto that I want to get out of, but I know it's probably going to peak around like maybe end of November. So I don't know whether
which one?
Like, cut my losses short, get my capital out so I can make moves, or just wait.
What percentage and which one?
Let's see, like Dogecoin, I'm down 6%. That's not really a big deal. Like I'm not having a problem selling that. But like Uniswap, I'm down 40%. Compound, 48. That one was terrible. Shiba, 52. Cardano, 10%. XLM, so Stellar Lunar, 21.
That's I bought XLM. You should be fine with that one. I bought that one last Friday?
Okay. So I'm still waiting on that one. I bought it way like at a way different time than you. But you called it out.
Hopefully it's not over here.
But
Hopefully it's not at
huh?
19. I said hopefully it's not like at $20.
No,
He's
that's
like,
fine.
yeah, yeah. Right.
Like it's about like I'd say in total in like crypto is about probably about like one 1/5 of my portfolio.
Is crypto?
So yeah, it's crypto.
Honestly, I'm going to be completely honest with you. As long as you have more Bitcoin or Ethereum than you do your other coins, you're going to be fine. And because it's only 20% of your net portfolio, again, not too bad. As long as your 8% is well diversified. Now, if your 80% is not well diversified, mutual funds, bonds. Well, I got rid of bonds because they weren't moving, but like the healthcare sector, gold sector, commodity sectors, the stuff where we're trading, um, you should be up because I think I made two all-time highs in the portfolio in between this a week and a half. I think I made
No,
20.
no, absolutely. My portfolio has hit an all-time high in the last week. Like
So
I'm doing phenomenal in my stocks and ETFs, but it's just like I have like it's a good amount tied up in crypto. I want to get out of it, but I don't know if I
why do you
should
want
get
to get
out of
out
it
of it
now.
so badly?
I'd rather put it into like more stocks, more ETFs, have more capital for like you were saying, like take on more risks for your trades. But like I'd love to, but I just don't have the capital for it because it's tied up in other things that I would rather be out of.
So okay, so that does give a good point, but I want to stress you're kind of in a with how your portfolio is kind of set up. You're kind of in a like a pickle, to be quite honest, because looking at Uniswap, looking at all like XRP, XLM, Ethereum, right? They are slightly underperforming in comparison to the stock market. So,
Yeah,
what is the number one rule that I always like to do? I sell high, buy low. That's it. And I
yeah,
cycle. That's all I do. Why have I been buying more crypto than I am with stocks? Should be. Why am I buying more healthcare than I am tech stocks? I'm
just
cycling
where the
it.
money's going. Yeah,
So you're kind of in a weird position. So you could do whatever you want. I'm not telling you what you buy, hold, or sell, all that good stuff. But what I'm telling you is if you're up substantially in that 80% for that stock market portfolio, I would
yeah,
consider trimming some of it. Not sell everything, maybe sell 20% of each thing. Things that are up, like your top three highest winners, sell
yeah.
20%, sell 15%. Then what you're doing is you're taking you're pulling your profits out of it, and then you're going to trade with your profits. Because if you lose your profits, okay, yes, it sucks, but you didn't lose your initial capital. So did you really
No,
lose? You
no, I'm well past like my initial, way past that.
so then trim your profits. Hogs get slaughtered. Bears make money. Bulls make money. Hogs go to the slaughterhouse to make bacon.
Okay, all right, I'll take that in mind.
Right? If you're doing well in the stock market, gotta trim. Did you think I wanted to trim 50% of my gold? No, I wanted to keep holding it. I was getting that a dopamine. I was like a freaking a junkie. I was like, yeah, keep going. Every time I kept going, I was like, I'm richer, richer, richer. But I have to follow my plan. And that is where the good or the bad emotions, you have to kill it. Goodbye with it. See you later. It's going to make you make bad decisions. When you're up, you gotta sell. When you're down, you gotta buy. And if you don't know when to exit a position, that's probably more worse than not knowing when to enter into a position. Who's that? Tammy, you
Okay.
laughing at me?
I am laughing.
But it's truth.
Dopamine. It's like, oh, I can know that. I know that it updates because it was in my, it was the whatever the gold portfolio that I had all of it in, and it updates at 4:30, and so I would be leaving home to come to work. I mean, leaving work to come home, and I would get to the stop sign, and I'd have to check it because it was right at
Oof.
4:30, and I
You're
was like,
dopamine
oh,
junkie
what's
like
it
me
gonna
now.
be? Woohoo! I'm
No, you
like,
got.
oh yeah. There was a couple times there where I went, oh.
No, I'm
But
not
no,
gonna
it was
lie.
great.
I'm
It
not.
was a great run, and it's okay. I walked away, and I'm happy, and um, It's great. You did wonderful. Thank you.
No, you did because you sold it. That you bought it, you sold it. I just told you what I did. At the end of the day, you're the one that's buying and selling it. So good job to you for doing that.
Thank you.
But again, I'm not gonna lie. I'll be looking at my portfolio. McLaren 720 Sport. This looks really good. Porsche GTR. New house in Florida. No, cut it. No.
Looking at a vacation. Okay, I'm not on that level, but I'm looking at a vacation.
That's still very, very good though.
Definitely. It's all good though.
All jokes, but I'm not gonna lie, I'll be doing that sometimes. I'll be like, ooh, that AP watch looks really nice.
Well, I will definitely try your dollar cost averaging. I have not tried that. I do trade on the trend lines, though I'm always looking for the confirmation before, and I get out too quick. I'm just see profit, take profit, I guess, side of things, versus staying in them very long. However, United Healthcare is probably the I held on to Tesla for a long time too, but United Healthcare is probably one of the longest ones I've held on to as well.
Well, it's good.
Except I held on though.
Too bad you didn't get to Eli Lilly. That thing be up $200 per share. Oh, you were?
Sold.
Oh yeah, good.
Yeah, it was. And I sold. I did well with it, but there again, it's see profit, take profit. I'm just.
I was actually.
But I that I hadn't. That's the one that I really do regret letting go of. So
I was actually thinking about selling a little bit of Eli Lilly because I saw this. Like
I've wanted to get back.
This is showing me that it's going to want to pull back roughly like that 825, which 825 is still fantastic from 640. Just saying. This was the last buying over there.
You think, where do you think it will pull back to?
Like the 830s, 825. I think I'm going to sell about, I think I'm going to do another 50% on Lily because I'm up like a lot. I'm up. Lily, actually, hold up. I low-key might just sell it now. Because Lily, I was contemplating for 4 days. I'm like, Every time it was going up, I'm like, should I sell it? I'm getting really greedy now. This is the AP watch right now. I should really start selling it now. So, and I just got busy today. I was going to sell it today, but let's do it right now. Like a little quick light. Ooh, another. Oh. Maybe keep going. What we got? Gonna trim some. I think I'm gonna trim like 30%. Yeah, I think 33%. I think that's what I'll be trimming. One day, I saw
tripping today.
Yeah. Honestly, I'm not too worried about that one. It was a little weird, the price action. I would admit it was a little weird. I think I'm gonna sell like 40%. So, what time is it? Ooh, I still got time. Give me 1 second. I'm trying to lock in some profits. Oof. Now my Lily price average is 666. That's the devil. Oh my gosh, that's kind of crazy. Why would it do that? Could it be like 667, 668, 664? Lily's the devil, I guess. Give me 1 minute. I don't mean to be rude. Gotta put that in the buys and sells. Do that. I gotta text some people. Okay, Now we're rocking and rolling. How much cash am I in now? Should be quite a bit now. Oh, that's right. I'm only 12% cash because I bought. What did I buy? I bought B. I bought B and I bought UNH. I tripled my position on that one. I took a lot more risk than I probably should have, but it's paying off. I'm up
You
13%.
also bought Chipotle.
Oh yeah, Chipotle too. That was also a big heavy hitter too. I bought quite a bit of that one too. But yeah. I usually things that are beaten down that they don't get like 6 months from now. Something's gonna happen to Chipotle. It's gonna be all over the news. Chipotle's gonna be like $80 or something like that. It's the best stocks in sliced bread. It's better than Chick-fil-A, better than Wendy's, better than McDonald's. You're gonna hear it all, and we're just gonna be sitting cracking up laughing, and we're gonna say, "Told y'all," telling you. Because even if it doesn't, even if it takes longer, even if it goes down, you know what I do? Cover calls. Have 100 shares or more. You need quantities. You need factors of 100, and then you write cover calls on them. That's it. So if you buy Chipotle at what was it? Let's say you bought it at 40. I think we bought it at $40. $40 and some change. 40, 60. I think that's what it was. I don't remember. Tell you looking at the chart right now. So yeah, we got it like somewhere here. Oh, actually, I gotta look at before I go. I gotta look at this chart. This chart's kind of mid. This is institutional buying. This right here, this large volume. This is after this very large pullback. Now, if it breaks below $32, disqualifies. So then it doesn't. So we'll be keeping an eye on that. So 32.55. But going back to Chipotle, this will be my last one. Put it that way. So even if I bought Chipotle at, let's say, $41, call it 41.00, even on the nose. What you can do is you can sell a cover call for same week for $45, right? And then if you want the position to be executed, okay, so you keep the option premium, plus you make $4 per share. That's how I get out of bad positions, is like if I don't want the like SBET, that one's really tripping. I'm not gonna lie, I really don't like that one now. I really liked in the beginning, but boy, did that like uppercut me, curb stomp me in the face. I could tell you that. A little salty with that one, because the way how they were promoting it, the way how their money was going through, and the way their price action is not the same. Not the same. Ethereum going up and SBET goes down. That makes no sense. While Bitfarm's going up, while Bitcoin goes up, that makes sense. Whatever. But let's say like how I got sold what? 30% of my position. How did I do that? I put a cover call at a higher price of where I bought it at, and then I just wait till it expires. 9 out of 10 times, if it is smaller position size, I don't do the whole position size. I do a little bit at a time. It will get executed. Not all the time, but it will get executed. There's some cases when they're really, really far out of the money that they just don't. They just go to zero, and you keep the option premium. That's it. So you're becoming the option seller. So, and if you want to get stuff at good prices, you do sell puts. You execute sell puts. That's like when someone has like Nvidia at a really dirt cheap price, and you're like, well, I'm going to take them from you now. And then Nvidia skyrockets. I did that a couple of times. I'm thinking of myself, the person who sold it, they're probably like, crap. Because there's like 99% of retail doesn't execute their contracts because they're too expensive. So like what I'll do is like if I really want something for dirt cheap, I will wait for like a call expiring like an hour before Friday and then execute it. Because at like Friday they're like worthless. like an hour before, they're almost worthless. So you get them for like maybe $100, but you get a shares maybe $5-6 less than the current price now. So it's fantastic. Not all the times it works. Like Tesla, it does not work with Tesla. Tesla, till the very minute, those contracts are expensive. To the very minute, they're expensive. But like Apple, yeah, I've done that with Apple. I think I bought like a $50 call, executed it, and I got Apple at like 125, something like that. It was some crazy. Because the Apple was going down. So when the Apple goes down and it's going close to Friday, well, when it's Friday an hour before and the market's going down, usually that's like the prime time to like when you want to execute a call, because a lot of people are wanting to get rid of their positions when we should be buying them. But you can leverage by executing. But that's on a different ball game, because you do have to have the equity for that. You need to have 100 shares. So, but yeah, fun stuff. All right, everyone. This is recorded. So my little rants will be chopped up and then sent out as usual. Thanks for participating. Thanks for the
Thank
laughs.
you.
Yeah, not a problem. I hope I answered everyone's questions well, or their positions very well. Also note, later in the week, I am probably Monday, maybe not so much later in the week, maybe Monday, I'm going to put a notification that if anyone writes a 5-star review on WAP, you get I'm writing a book, an ebook, so you get it for free. So as like a little thank you. I got to give it to like 2 other people. So that'll be the first raw book that I have ever written. So yeah, we'll see how that is. As someone being dyslexic, I think I'm just going to pay somebody to check it for me. It's a lot easier to pay somebody than for me to go through all that hours. But anyway, NVIDIA looks good. Actually, we might take a position in NVIDIA. But yeah, we're going to head out. Because last week I was 2 hours. I'm not trying to do that this time. All right, everyone.
Thank you so much for all that.
Yeah, of course. Not a problem. Thanks for joining.
Have a good
Thanks. You too. Bye.